Well, gang, California is fast becoming a buyer's market. Sales volume is down, pricing is down, more homes are selling below asking price, and days on market is growing. In this California market update, we're going to be looking at the latest data from the California Association of Realtors, really digging into the metrics to understand exactly what's happening in the market right now. And then I'm going to show you exactly what I'm seeing in the market right now. Recently, with a client in Lodi, California, we placed 3 lowball offers on 3 homes, and the responses we got really will show you what's possible in this California market. And then we'll answer the most important question: how long is this buyer's market going to last? How long will this window of buying opportunity be open before we see prices climb again? I'm Jon Schwartz, your 1% commission California realtor. Look, it's 2025. If you know how to use Zillow or Redfin, you shouldn't be paying your realtor like it's 1990. Learn more at my website, jonsch.com. That's JONSCH.com. All right, let's get started with the most recent print from the California Association of Realtors. These numbers reflect what was happening in July. Existing home sales are down 4.1% from last year to an annualized home sales rate of 261,000 homes, almost 262,000. Median sale price is down 0.3% from a year ago to a median sales price of $884,050. The unsold inventory index, and this is a measurement of how many months of supply are left over at the end of the month, is up almost 28% from a year ago to 3.7 months. Now, traditionally, a buyer's market is declared when unsold inventory reaches the 6-month level. So obviously we're not quite in a free-for-all kind of buyer's market like we're seeing in some markets in Florida and Austin. But I consider this a California buyer's market. When inventory climbs to north of 3 months, for California, that's a good environment for home buyers. And this isn't the only statistic that points to why we're in a buyer's market. There's more to come. This is the high-level business. All right, median days on market is up 40% from a year ago to 28 days. Now, this is still lower than the national average days on market, but again, we're in California. This is great for California buyers. Let's take a look at how these numbers are playing out regionally. So in Southern California, which is the biggest chunk of the California housing market, existing home sales are only down 1.7% from last year. However, pricing's dropped a little more than the statewide average at negative 0.7% to a median home price in Southern California of $875,030. The unsold inventory index is slightly higher than statewide at 3.8 months. Median days on market also slightly higher at 29 days. And the sale price to list price ratio is 98.6%. And remember, when the sale price to list price ratio is below 100%, that means that homes on average are selling for below list price. In the Central Coast, existing home sales are actually up from last year by 1.7%. Existing home prices are also up from last year at 4.9% for a median home price in the Central Coast of $1.115 million. Obviously, the Central Coast is doing really well relative to the rest of the state. Unsold inventory is even higher than SoCal at 3.9 months. Median days on market is pretty tight at 22 days, and the sale price to list price ratio is 97.8%. In the Central Valley, existing home sales is down 1.5%. Home prices are completely flat with a median home price of $500,000. The unsold inventory index is slightly tighter than the statewide average at 3.6 months. Median days on market is slightly faster at 27 days, and the sale price to list price ratio is 98.6%. In the Bay Area, and this is the second largest sector of the California housing market, existing home sales are down 4.1% from a year ago. Prices here are also completely flat for a median home price in the Bay Area of $1.3 million. Unsold inventory is quite low at 2.7 months. Median days on market is pretty quick at 24 days, and sale price to list price ratio is 100%. Now, all of this indicates that the housing market in the Bay Area, while it's contracted slightly from a year ago, is still very competitive. Prices haven't contracted, inventory is still down, and the 100% sell price to list price ratio indicates that buyers are not getting any kind of a break in the Bay Area. And finally, the far north, which is actually a very small piece of the California housing market, existing home sales are up 4.8%. Existing home prices are actually up 3.1% to a median of $397,000. There is tons of inventory in the far north, 5.2 months to be exact. The market is the slowest in California at 32 days for your median days on market, and sale price to list price ratio is the lowest in the state at 97.1%. So again, these different California regions are basically different markets in and of themselves. I mean, California is the largest state in America by population, and I assume by the number of housing units. So the state as a whole is a massive market. And each of these regions inside of it, well, some of them are as large as other states' entire state market. So it's interesting to see how regionally we have such differences. Let's dig a little deeper into the California sales numbers and see what they're telling us. As we already mentioned, sales volume is down to an annualized 261,000 units. That's down 4.1% year over year. As you can see, our current level of sales is still well below our pre-pandemic average. We're used to around 400,000 home sales per year in California. And right now we're barely chugging along at 261,000. We really, bottomed out here in 2023 and actually saw some rebounding in 2024 and the beginning of 2025. Unfortunately, we've fallen off in the past couple of months. To be exact, year-over-year sales growth has declined now for the fourth month in a row. We can see the mostly positive sales growth in 2024 and the beginning of 2025, and now 4 months of negative sales growth. If we again look at California regionally and look at home sales growth by region, we see that Southern California had a month-over-month gain in home sales of 1.3%, but a year-over-year decline in home sales, as we noted, of 1.7%. The Bay Area had a month-over-month and year-over-year home sales decline in the 4% region. And we should note that Southern California, at 43% of the California market, is the largest chunk of the California market. The San Francisco Bay Area is about half that size. Actually, the Central Valley is also about half the size of Southern California. And if we divvy up home sales by price range, we see that home sales really fell kind of right in the heart of the California market in the $500,000 to $2 million range. That's where we saw the biggest decline in home sales. We saw growth in the low range, 300,000 to 500,000, also decline in the absolute lowest range, homes that cost less than 300,000. And there aren't many of those in California. And we actually saw sales increase in the $2 million plus category. Obviously, the economy that we're living in is affecting different segments of home buyers in different ways. Additionally, pending sales are down by 6.9% relative to last year. And pending sales is an important metric because it tells us what's going to happen next month. A property that's pending now will become a home sold a month from now. It takes about 30 days for a home to make it through the escrow process. So the fact that pending sales declined by its biggest drop since November 2023 suggests that this contracting California market is going to continue. We've seen the market contracting for the past 4 months, and if pending sales is any indication, the California housing market will continue to contract in the 5th month, maybe the 6th month. So sales are down. Fewer people are buying homes. Why? Well, there's a couple of reasons. Prices are still exceptionally high. The economy is presenting a lot of uncertainty right now. We really just don't quite understand what direction we're headed in. And in times of economic uncertainty, consumers usually hunker down. Also, we have some interest rate fatigue. Interest rates have been very high for very long. However, rates have been coming down over the past month, and we will get to that in a second because that fatigue might wear off sooner than later. Now let's take a look at what's happening with inventory. Listings are up. In fact, active listings, that's the number of homes that are presently for sale, active listings increased to its highest level since October of 2019. We have about 50,000 homes for sale on the California market right now, and that number is absolutely in line with our pre-pandemic levels. However, we have to note that inventory levels are still relatively low for the time of year. There's an annual cycle to the housing market, and inventory levels fluctuate in the summer and then in the winter, etc. So if we focus just on July, the month we're considering, and I'm going to try to block out the rest of this graph slightly so that we're just looking at July, what we're looking at is inventory levels for the month of July, going back to 2018, that's the green line, all the way here on the left, to 2019, 2020, 2021, etc., to 2025, here all the way on the right. And as you can see, these are our pre-pandemic inventory levels for July, and this is our inventory level for July 2025. We're still south of where we should be for a July month. So inventory has climbed dramatically. I mean, just look at this lift from the previous year, but we're still not back to where we're used to being in the month of July. Still, we're getting a lot of growth statewide. Year over year, active listings grew by 37.7%. And regionally, we get even more dramatic numbers. In the Central Coast, active listings are up 27.3%. In the Central Valley, 41.4%. In the Far North, 22.9%. In the Bay Area, which is still so competitive, inventory is up from a year ago, 40.4%. And in Southern California, inventory has doubled from last year, more than doubled. It's up 103.9%. So you've really got to balance these two metrics. On the one hand, inventory still isn't where it should be, but on the other hand, it has risen dramatically. What that means is we're in a window of buyer's market, a moment in which inventory is very high, but not higher than usual. It's a bit of a paradox, but this is what you have to look for when you're analyzing housing markets to understand when a buying opportunity is presenting itself. And finally, we have to take a look at days on market, which is not quite a measurement of inventory, but it's a measurement of how the market is responding to the amount of inventory that exists and the number of buyers that are trying to gobble up that inventory. Days on market, July 2025, 28 days. That's 40% more than a year ago when we were at 20 days in July 2024. So lots more inventory, slower market. What does this mean for pricing? And how do we see this playing out in real life in Lodi, California? Well, the California median home price declined for the third month in a row. And this is a time of year when prices should be climbing month after month. I mean, we're talking about July 2025, the peak of the annual housing market. Generally, prices peak in July and August before beginning to fall off again in the fall. So it's rather shocking that prices have been falling since April. To have prices descending from April to July, very unusual. However, year over year, we're still only down 0.3%. I mean, that's hardly a decline at all. So again, we're in this paradoxical moment where prices are falling, not dramatically, but they're falling. And when we dig deeper into the pricing numbers and look at median price growth by percentile, we see that the big price declines are in the 60 to 80th percentile of California homes, which in terms of price range, that's like a little less than $1 million to somewhere between the $2 and $3 million range. That's the slightly above median sweet spot of California homes, and that's where we're seeing prices decline the most. The share of homes sold above asking is at a 6-month low at 31.3%. Now, what that means is, if you look at the inverse, it means more than 2/3 of homes are selling below asking price, 2 out of 3. And if we break this metric down by county to look at homes sold above asking price by county, we see that in only 3 counties are the majority of homes selling above asking price, and these are all in the Bay Area: San Francisco, Santa Clara, and San Mateo. Not far below, of course, we have our SoCal counties of Los Angeles and San Diego. And then we have a long tail of counties where the majority of homes are selling below asking price. So let's see this in action, shall we? Okay, so a couple of weekends ago with a client, we put in 3 offers on homes in Lodi, California. We got home number 1. I'm not going to share the addresses. Home number 2 and home number 3. Now, these homes had different list prices. Home number 1 was asking $539,000. Home number 2 was asking $529,000. And home number 3 was asking $519,000. We, of course, offered low. Home number 1, we offered $510,000. Home number 2, we also offered $510,000. And home number 3, we offered $505,000. Well, in each case, we got a counteroffer from the seller. Add this here, counter. Home number 1, which was listed for $539,000, we offered $510,000, and we were countered back $520,000. Home number 2, list price of $529,000, we offered $510,000, and we got countered back, guess what, guys? At $510,000. Now, you may be wondering, how do they counter us back at the same price we offered them? Well, they countered with slightly tighter terms. They wanted a slightly shorter escrow, which we could absolutely accommodate. So they were willing to accept the lowball offer that we presented them. And then finally, home number 3, which was listed at $519,000, and we offered $505,000. The counter came back at $510,000. All right, got to make myself a little smaller so you can see all of this. However, there is one other element to these offers and the counters we got back, and that, of course, is that I am a 1% commission California realtor. So when we offered $510,000, it was also with a 1% commission for me. And this offer also included a 1% commission, and obviously, our third offer included a 1% commission. Now, why does this matter? Well, the commissions for the agents come out of the seller's proceeds from the home sale. So the less money that your agent takes, and if you're working with me, I'm only taking 1%. Most agents take 2.5%. The less money your agent takes, the more money the seller gets. So when they countered at these prices, 520, 510, 510, the counters, of course, included the 1% commission to me. They weren't going to offer us back these prices with a higher commission going to the buyer's agent. The commission that we offered them, of course, was incorporated in their counter to us. So before you get too excited thinking that you can go find a home priced at 540 and offer 510 and land at 520, you have to appreciate what these counters are equivalent to. Were they being made to an agent who was taking the traditional 2.5%? What does that mean? Well, house number one selling for $520,000 with only 1% going to the buyer's agent is equivalent to selling this home for $528,000 if a traditional agent is involved who's taking 2.5%. Likewise, these two offers, these two counters that came back at 510 are really equivalent to 518. So if you're working with a traditional agent and you're making low offers like this in this kind of price range, the counters you should expect to get back look more like these green numbers, 528, 518, 518. It's by working with a 1% commission agent like myself that you'll get more attractive counters back, this 520, 510, 510. And if you're interested in achieving these lower home prices by working with a 1% commission agent, you can learn more at my website, jonsch.com. That's JONSCH.com. Okay, so now let's answer the question, how long is this buyer's market going to last? So to answer that question, first we have to look at inventory numbers. Inventory July 2025 was at 3.7 months. That's up 27.5% from a year ago. A year ago, we were at 2.9 months. Now we're at 3.7. However, this level of unsold inventory is actually lower than the previous month. As you can see, our chart goes down for the month. Last month, we had 3.8 months of inventory on the market. This month, we have 3.7 months of inventory on the market. So again, even though there's more inventory than a year ago, there's less inventory than last month. So even though the headline is that sales are down and inventory is up, when you look more closely at the data, you see that actually buyers are eating up the inventory that exists out there. So this moment where homes are selling below list price is going to come to an end. When? Well, this is an important graph in answering that question. Right now, we're looking at price declines versus payment declines. So mortgage rates have also been falling over the past 2 to 3 months, especially in the past month, and we'll get to that in a second. So while prices are down 0.3% year to year, which doesn't seem very significant, payments are down 1.7% year to year. And as mortgage rates continue to decline, the payment is going to drop faster than home prices are dropping, and that's going to pull more buyers into the market. In fact, just this week, mortgage rates have officially returned to 6.5%. This is the national mortgage rate average. And in California, we tend to see mortgage rates a little lower than the national average. So in California, we're seeing 6.25% rates. And if we look at the chart of 30-year fixed mortgage rates, we do see this sharp decline since May. Now, it's important to pay attention to rates so that you can stay ahead of the competition, for lack of a better word. Rates fall, and what I've found is it takes a couple weeks for that to get into the zeitgeist, for people to understand that rates are lower now. Well, guys, listen, rates are lower now. They're officially back at 6.5% and well under in California. So when we consider the fact that inventory is high but has actually declined from a month prior, when we look at the fact that payments are falling faster than home prices and mortgage rates have dropped pretty noticeably over the past month or two, what we can look out and predict rather accurately is that more buyers are going to come into this market. The question is when, and the other question is, can we find a home that we love before that happens? These numbers reflect July. I'm recording this video right at the beginning of September. Typically, the fall is a better buyer's market in any market in America because fewer people are trying to buy homes once the school year starts. I think we're going to have a pretty good buyer's market into the winter. And by spring of next year, when home buyers reemerge as they do every spring. I think rates are going to be lower. I think we're going to have a lot more motivated buyers, and I think we're going to see prices climb considerably as we do most spring and summers in California. So if you've been considering buying a home over the past few months, if you've been thinking maybe the end of 2025, maybe the beginning of 2026, I say to you, your timing is very good. This is a good time right now to get into the market, to find a home you love that's been sitting on the market and get it at a price below list. And if you'd like some help, you can schedule a call to talk with me about your home buying plans at my website, jonsch.com. That's jonsch.com. And subscribe for more videos about the California housing market and buying a home in California.